Good morning, everyone. Trump wins more elections, and then the market did this 121 points gap, opening gap. So you might think, well, what else we can do in a day like this with an opening gap, huge opening gap like that? Right? It's almost two times, what a normal day is in terms of range. So 121 points in of a gap. So you might think that with that huge opening gap, usually the market stay for a while in a trading range pattern. So that was what really happened until bar 34. Most of the day, midday was basically half of the day was basically trading range, and then we'll see what's happening later. So it evolved to a tight channel the rest of the day. But then let's try to see how we can do this. I was not able to trade it during the morning here, so I came to trade right here, right, 18, 19, and I get 10 points from 23 here to 26, if I'm not wrong. I get 20 points there. And then this 40 killed me because I was trying to sell. And then I did sell here and it was stopped. But then I'll explain how we can really trade this, right? Okay, so the first one, B1, good bar, but with tail above, below, we have a huge opening gap, right? So we probably will have this B1 will have second leg down, right? So basically, you have B1, then an inside bar, and then an outside bar. So you can sell that outside bar with stop in the same bar because the premise is that you have follow through of that outside bar. If you don't like that one, you can sell 50% of bar one. Let's say that you can sell right here, for example, or you can sell right here, high of two. When you might have probably more sellers there trying to sell, trying to scalp, right? So these bar two, three get 101 in five, which is good. So you can take that three. It's a little bit, we have 15 points to get that one. It's not the best risk reward exercise. So to be honest, I will think twice to sell that one, but it makes sense. But volatility was there, so we can sell that one. Stop in three. Micro channel and then bar six, nothing to do in bar six. Even bar seven is a good bar to sell at the close. Right, we're keeping this opening gap here, and if we see that that spike, look at this, is 50%. So you can sell at the 50% of this leg, right? It will be great, and that's why seven has a tail up above. And then we see that here the eight failed, and of getting the second leg. We can say that this is a second leg here. So when it happens and eight closes the way that it closes, eight is a good buy. So you can buy eight. Of course, is it 50% here? You cannot buy this one because you're gonna be above 50% of the trading range, so it's not recommendable to do that. Okay, so and then you can just exit and close of two here, right? And then you have this trade here, or we stop in six and you goes exactly to 12. So it's a good trade here. Again, it's 18 points, but I would say that my stop here No, it's 8 points. Um, my target is considering this up. Basically, that's the target that in 12 happened. When it goes to the target, of course, you're gonna get profit taking. So double bottom, big up, big down. Usually it trends to look for trend looks for make a triangle. So you might think you might be ready to know that you have a triangle as a result of that big up, big down, right? So the triangle, if you make this like this, you know that this 13 is in upper the upper side of the trading range, so you can sell 13, right? It doesn't matter that this is micro channel because you already have a micro channel here. Micro channel is big up, big down. It's just basically you're gonna get at least couple of legs down and make it a triangle. You know that six is not likely to have new low because it's a triangle that you're looking for to be formed, right? So essentially, you're looking for that 70 is a good exit, even in the close, or even 18 or 19 is a good exit, right? That's basically what's happening. Okay. Then you have a lower high here and H2 in 20, right? So 2021, nothing to do there. But then when you have that 22 failing, right? So you can buy here with 50% right here, or you can buy the close of 23, okay, for the second leg up. So close of 23 in that case. And I show you that when you do this, you see that 23, this is because you have a new leg here, you need to compare versus the new leg. You are buying below 50%, right? Or then there's no more buys here. Sorry. Leg one, leg two, you need to exit in the close of this 12, as I did. Okay. You exit there because you expect to have sellers in that close, right? And then you see your stop is really in the 23, right? Let's see if you are more conservative, you put a stop here and it goes there. Right? So basically that's the trade in that case. So when you goes here, you see that you might have this trending line draw, right? And you might have this trending line here draw. It's a triangle. So that was what we're expecting. Big up, big down, we expect a triangle. So you have a triangle. Okay? So when you are coming from a strong opening gap, right? It's not likely to have a follow through after that gap, huge gap. It's more likely to be trading range or even revert this back. So for example, you have one leg, two legs up, and then L1, L2, and 31, and you have this, let's say 32 that is inside bar. So this is kind of a TTR that probably it's good for getting long, short, as I try to do, right? So I try to get short here. Essentially, we're in 34, 34, 35. When this 34 happens, double bottom, right? Believe that climax and get short here. Didn't work, but that was the right thing to do because you were expecting to get at least to revisit, this trending line here. Okay, where the market change for breakout. So here you still here think, if you see this in 1 minute chart, this is a This is a wedge here. And then if you see 27, 33, 40, that's another wedge. So until here, until 40, you can hold your, it's a wedge, you can hold your short. And I told people that I wanna buy above 40 because above 40 it's gonna be a fail wedge. That's what I told the guys, right? So where that fail wedge will go, we'll see. But then, so if you sold here in 30 or 35 here, right? If you sold, you should keep your trade until you have a breakup of 40. So I lost this trade above 43. Above 43, it picked my stop, right? And that's normal because that's a low probability breakout, right? So wedge here and then it fails here, right? So 41, it's a inside bar, and 42 is an inside bar, and then we see what's happened, right? So if I did sell here in 42 below, right? It's good selling. This is an L2 wedge and a good entry, and then you get a stop it above. And if you get a stop it above, then it's gonna accelerate up. That's what you expect, right? So that's a good trade because you know clearly that you have a premise here, and it's failing. You're gonna just reverse back up. Okay. So this is a selling in 42. You should sell that 42. At least the traders that always are traders, price action traders selling that 42 is a wedge, right? And then you you reverse back on 44, 44, right? Stop on 43, and then just be happy the rest of the day. Okay. So here happens above 44 happens the failed wedge breakout. So failed wedge is this from here to there. It's about to get there. Okay. It's about to get there. So that's the long here. Okay, and then you probably will get this target up, right? 5975. We were in 5976 close by, right? So that will be the target. You have here micro gap here. So when you see that this could start the breakout, you have micro gaps here. You don't see micro gaps here. Do you have micro gaps too, but it's immediately closed. So this could be an indication, a signal that we may have more bull, still more bull pressure. Then 44 is your reverse up, and that will be the trade of the day, I'll say, probably. It's more clear, right? So then one leg, second leg, three legs here, sub wedge here, and then couple of legs down, and then trend resumption. New high, couple of legs down, then another spike and final spike. I'll say that this is another wedge here. This one. Okay, so you see wedge here, and then couple of legs down, first leg, second leg, third leg, okay? It's a little bit more complex for the third leg there. So we have three wedges there. And the market was basically in a tight channel. We're making a couple of legs, making, failing, L1 failing, L1 failing, then L1 failing, then L2 fail, L1 fail, L2 fail. So you see that the market were doing the same behavior even from here when it started the breakout. L1 fail, L1, L2 failed. This is a L1 fail, right? So L2, L1 failed again. So all the L1s failed and started to fail starting 23. So if you, I will not buy 24 of course, but 23 I'll do that below the 50%. Okay. What else we can do? Okay, we can also project this leg up. And guess what? I didn't know that. I just did it. Okay, going exactly there. So that's the last bear leg. We can say that this is an exhaustion leg. So the measure move is going there, right, to the exhaustion leg. Entries. So I'll not enter here. I'll be selling here. Right, we're selling the 33 and we're selling the 40. It's been day reversal probably. So we'll sell. It's not, it's testing the height of the day. So it could, it could fail. And also, and then 43, 44 is the breakout, not only of the height of the day, but also of the wedge. So it's a failed wedge breakout pattern. And then accelerating up. That's basically what's happening here, and it goes to this 13, 19 exhaustion leg up. Okay, basically it's that. Entries are when you see this trending line here, this first trending line, right? It's trying to break out first time that is touching EMA. I'll buy here the moving average, right? But I will buy also about 58. I don't like that because it's too high, but will be okay. And then again, right, when it's happened, fail L1 here in 64, I'll buy this 66, of course, right? And I go there, probably exiting in below 70. Okay, because this could be the climax. We don't know yet that we're gonna get these two, but this could be the climax. Okay. Well, that's it. You can buy in the moving average and then exit in the new heights. Basically, is that for the day. Where the day changes here, 43. The day changes here. This is the breakout, 43, 44. So 44 is the best trade of the day. If you hold it until you should hold, that is 69, you get 17 points. Okay, that's the trade. This one here is to exit here in 26. I will not hold that one. Okay, basically is that. So the best trade for me is 44. It's more clear. Then you have to stop here in 43. Very clear. And you got from that, I think that 4 times, it's 3 times your risk. That's essentially the trade. Okay, let me know in your comments what you think about the day. What was the most difficult piece to identify this breakout? It was not easy. And let me know any additional trade that you might want to you might want me to analyze in terms of risk reward and also targets. Okay, so thank you for watching me, and don't forget to click the like button.